What I'm about to reveal could completely reshape how you view silver's next move. Everyone's watching gold climb toward $5,000. Everyone's tracking stock market volatility, but almost nobody is prepared for what silver is about to do next. According to Hemke, we're standing at the edge of a breakout so violent, so extreme, it could send silver past $100 and possibly all the way to $500. This isn't hype or speculation. He's not talking about a slow, steady climb. He's describing a violent rupture in the market, one that doesn't wait for retail investors to catch on. Right now, all the signals he's monitoring, charts, volatility patterns, physical flows, are lining up in a way that suggests we're closer than most think. The price action looks calm, headlines are quiet, but underneath, historic energy is building. When it's unleashed, the rally will be so sharp, so fast, it will leave most investors in complete shock. If you think silver's already had its run, smash that like button, drop your thoughts in the comments about where you see silver headed, and subscribe because what comes next could be the biggest move of the decade. There's a saying from my generation, when E.F. Hutton talks, people listen. Hemke has that kind of credibility in precious metals markets. When he was talking about silver reaching $100, then $200, even skeptics had to pause and reconsider. He's had an exceptionally accurate handle on this entire move. The critical point Hemke makes, this isn't like previous occasions where silver spiked to $50. In 1979 to 80, silver rocketed to 50 in about 4 months, then crashed back to 10 within 2 months. In 2011, we hit $48 on October 2nd and haven't seen those levels since until now. But something more important happened on October 2nd, 2011. That was the first day silver went into backwardation, where spot price trades higher than futures price. This indicates physical misallocation, physical shortage, physical stress in the market. It got really deep in October, then evened out. But even recently, during heavy selling overnight, that backwardation reached 30 to 40 cents again, with spot price 30 to 40 cents higher than the front month March futures contract. Here's where the setup becomes incredibly dangerous, and you need to understand this fundamental shift happening beneath the surface. This is evidence, along with lease rates in London and what we know about vault stocks, that 4 straight years of supply deficit totaling 800 million ounces is creating serious stress in the physical part of this fractional reserve pricing scheme. Then you have China announcing back in October they're implementing export controls. You have the US declaring silver a critical mineral. All these structural forces are converging simultaneously. On the surface, the silver market looks deceptively calm. Prices are creeping higher, but there's no mania, no speculative frenzy, just a quiet, orderly pattern of higher highs. Volume is muted. Volatility falling. It's the kind of setup making casual observers think silver's rally is running out of steam. But Hemke sees it completely differently. This isn't complacency, it's the calm before the storm. Hemke points to a rare and powerful signal, rising implied volatility in options even as realized volatility continues compressing. That divergence is incredibly rare and not meaningless. It's the market quietly screaming that something big is coming. In silver, where the illusion of liquidity is often maintained by short sellers, a retreat from the sell side doesn't trigger panic, it triggers absence. An absence of supply in a structurally tight market doesn't result in a trend. It results in a gap, a vacuum, a rupture. Hemke believes this is exactly what's forming right now. The charts don't show euphoria. They show a loaded spring. A breakout not fueled by retail frenzy, but by the invisible unwind of structural pressure. That's what makes it so dangerous. When the move finally comes, there won't be time to react. only time to watch. That's why in his forecast this year, Hemke says he's probably more bullish than he's ever been in terms of price. If this analysis is helping you connect the dots, hit that like button and make sure you're subscribed with notifications on. What makes this setup unlike anything seen before is how many structural forces are converging simultaneously. Hemke isn't just pointing to technicals, he's watching fundamentals tighten like a noose. Silver has entered its 6th consecutive year of market deficit, with demand outpacing supply by over 100 million ounces. Yet the mainstream narrative still hasn't caught on. Industrial consumption is surging from solar, EVs, data centers, AI chips. Meanwhile, China announced export restrictions starting this year, forcing companies to apply for licenses just to move silver out of the country. That's not just friction, it's fragmentation of the supply chain. Add historic lows in Shanghai stockpiles, a rush of silver flowing into the US amid tariff concerns, escalating tensions in global trade environment, and you have the makings of a full-blown supply crisis. Hemke sees this not as coincidence, but as the ignition. This isn't 2011, it's not even 1980. It's a new cycle where investment demand is colliding with industrial necessity, and supply is structurally unprepared to cope. When you overlay relentless ETF inflows and growing geopolitical fragility, the message becomes clear. This rally isn't speculative, it's systemic. What would force a pullback? That would require something economic, because Hemke is fully convinced this is a physically driven situation. You'd have to change the physical supply-demand picture to force that pullback. If suddenly there's global economic collapse and demand for industrial silver dies, if suddenly there's global austerity and the US doesn't cut rates by half this year on the short end and institute yield curve control on the long end, if they don't run another 2 trillion plus in deficit spending, if all that changes, yeah, that could impact not only investment demand on the physical side, but also demand for the safe harbor debasement trade. All that could get factored back out? Sure, we have to be wary of that. But Hemke doesn't think that's a likelihood. He thinks this physical stress is underpinning the rise for both gold and silver. Central bank demand in gold for the last 4 years has been well documented and underpins the market, preventing really sharp pullbacks. This notion of being overbought on technical factors, he's never seen a monthly RSI this high. But if silver is simply a dot on a screen where you can apply Elliott wave and technical analysis, okay, sure. But at this point, he doesn't think that dot on the screen is what's determining price. If 1 or 2 large players step in and demand delivery at scale, the entire illusion could collapse overnight. That's what Hemke means when he says the rally won't be gradual. It'll be a violent repricing triggered by the failure of a system that can no longer paper over physical reality. You might have silver up 50% over several months, but on an intraday basis, if in the first couple hours the price of COMEX silver is going down, these machines see that and just sell. You're constantly getting ratcheted back lower. That's why shares have been underperforming. That volatility has had significant impact. To understand where silver's heading, you have to understand where it's been and how it behaves during breakout phases. Silver doesn't trend like other assets. It builds quietly, then erupts violently. Where do you think silver is headed? Are we on the verge of the most explosive move in precious metals history? Drop your thoughts in the comments, because understanding how others are interpreting this data adds crucial perspective to what we're all witnessing unfold in real time. Dit kende ze oorbeprakin